Hello, my name is Blake Friedman, and I am here with Scott Fisher and Stephanie Esper, and we are here to tell you why Caesarstone Sadat Yam is an excellent stock to purchase right now. Caesarstone is an Israeli headquartered company that manufactures quartz countertops and conducts business around the globe. Many people are used to hearing about 100% granite countertops, but Caesarstone is attempting to enter the home appliance market by popularizing countertops made with quartz. Unlike granite, quartz is man-made stone composed of 93% granite and 7% resin. It is an extremely durable product, resistant to cracks, scratches, and stains. It is also a product that is easy to clean. Quartz has several advantages over 100% granite materials. For one, quartz is much stronger and more flexible material, making it easier to install within homes. Furthermore, installing quartz does not create noticeable installation lines that appear when connecting slabs with granite. Quartz is also less porous than granite. Granite's porous material allows for germs and bacteria to grow within the material. Consumers do not want a very unhygienic countertop. Quartz is not very porous, making it very hygienic countertop material. Quartz is also easy to replicate. Samples of quartz are easy to copy, and materials of granite are hard to replicate. When showing customer countertops samples, they will be able to trust that the quartz material they choose will be the exact quartz sample installed in their kitchen. However, granite may not be exactly the same design a customer chooses. According to Consumer Reports in 2013, quartz was rated as the top countertop material. Quartz scored 3 points higher than granite on a 1 to 100 scale. These ratings are also similar to a 2012 report where consumers ranked quartz to be the best countertop material. Consumer trends show quartz is preferred by the general market and has the potential to become very popular amongst consumers. Quartz countertop material is also becoming known amongst consumers and designers. In Las Vegas, the enormous kitchen and bath industry showcases various kitchen and bathroom materials to a very large audience. At the convention, quartz countertops and their advantages are shown to over 500 of the industry's leading suppliers and 20,000 kitchen and bath professionals. Currently, quartz has an underwhelming popularity within the United States. According to an article published in 2015 by Investor's Business Daily, engineered quartz accounts for only 8% of all countertops in America. JP Morgan analysts state that the quartz market is one of the least penetrated developed markets in the world. Caesarstone has seen consistent sales and revenue increase in the US over the past 4 quarters. In Europe and Australia, quartz is seen to account for 30% to 50% of countertop market, and Caesarstone has seen consistent growth over the past 4 quarters in these regions as well. US and other global trends indicate that Caesarstone is attacking a market where heavy expansion is possible. There are many locations to popularize quartz countertops, showing Caesarstone's profits have a chance to skyrocket. Within the US, countertops also correlate with house sales, as many homes have some sort of countertop. Looking at US new and existing house sales forecasts over the next 5 years, both housing market trends show that they increase. If home sales increase, so should countertop sales, an opportunity which Caesarstone can take advantage of. The lucrative untapped quartz market does come with competition, however. DuPont, a privately held company, produces both quartz and granite countertops and has a partnership with Home Depot. Cold Spring Granite Company is also privately held, and Masco Corporation produces various kitchen appliances with a major division being dedicated to quartz countertops. However, Caesarstone appears to be competing well within the young industry. Caesarstone has a better return on equity when compared to the industry average, showing they utilize investment money properly. Because of potential future profitability of quartz and Caesarstone's standing within the industry, we see Caesarstone as a must-buy stock now. Now to show how Caesarstone is planning to expand its popularity and stay competitive, here is Scott.
Caesarstone employs a high-low marketing strategy that's focused on finding inexpensive ways to strategically brand their product as a leader in the quartz industry. To do this, they have partnered with many top interior designers to get their name out there. One of those designers is Mark Michaels, who is considered one of the top interior designers in the world, according to various interior design magazines. Michaels uses Caesarstone with his clients because of its ease, practicality, and superiority to other products on the market. Additionally, Caesarstone has a partnership with Tom Dixon, who's a world-renowned designer, and he's working with Caesarstone on a year-long partnership to create innovative designs with the company's quartz products. Dixon will be presenting his designs at different shows throughout the world, in Toronto, London, Milan, and New York. And the goal with partnering with Dixon is to gain brand awareness worldwide and illustrate the strengths of quartz, which Caesarstone hopes that they can do. Additionally, they recently displayed their quartz at Art Basel in Miami, which is one of the top designer showcases of the year. All these examples illustrate how Caesarstone is able to increase brand awareness in the design community and with consumers. Another way that Caesarstone is hoping to gain brand awareness is through its deal with IKEA. In May of 2013, Caesarstone became IKEA's exclusive supplier of non-laminate countertops, which represents a big chance for them to increase their sales. However, it indicated a small shift in their brand since Caesarstone has been a high-quality product, but IKEA is known for having lower prices. However, this hasn't been an issue in the past year since the deal has been in place, and it's not expected to have many negative effects. As I mentioned earlier, the IKEA deal has caused sales to increase for Caesarstone. However, margins went down since Caesarstone is now selling through a middleman. But overall, there's an increase in net income with the deal from IKEA, and there's more potential for growth as IKEA grows in the future. IKEA has a strong future outlook as its revenue increased 11% in 2014. Currently, IKEA had sales of 38 billion euros, and it's on track to reach its goal of 50 billion euros in revenue by 2020. As IKEA is delivering on this growth strategy and will continue to open more locations and increase its same-store sales growth in the coming years. In the U.S. specifically, where the deal with Caesarstone is located, U.S. sales increased 8.6% in 2014. Currently, IKEA has 41 U.S. locations, but it plans on expanding the number of U.S. locations by 12% by the fall of 2017, which is huge for Caesarstone as it will allow them to get more exposure nationally. IKEA's U.S. growth is of particular importance to Caesarstone since that's where IKEA will be selling the countertops. And as the number of locations increase, profit for Caesarstone will undoubtedly increase. And overall, betting on Caesarstone is betting on IKEA, and that looks to be a good bet as the company is on track to reach its ambitious growth targets.
Caesarstone's board of directors has undergone massive changes in the past month alone. Starting on November 5th, Kibbutz Sadat Yam, the largest shareholder in Caesarstone with a 32% holding, made a formal request to have 2 independent members on the ballot for board of directors. The members Kibbutz nominated were members of the Kibbutz as opposed to the members recommended by Caesarstone. In response to this proxy nomination, Caesarstone issued a statement alluding to the fact that they were surprised and disappointed by the news of the proxy contest and had always maintained a constant and close dialogue with Kibbutz on all relevant matters. They were significantly surprised to see the Kibbutz was nominating independent members in opposition of the company's nominees. The companies then went back and forth, issuing statements to the shareholders in favor of their nominees and against the opposing party's nominees. On December 3rd, the shareholders then hosted a vote in favor of all 10 of the Caesarstone nominees and against the 2 proxy nominees initiated by the Kibbutz. The new board of directors ensures a promising future for Caesarstone. However, when analyzing a company, it is important to take a look at the financials as well. This is broken down into 4 different components: price, profitability, risk, and management effectiveness. Analyzing the price components is beneficial to the analysis of a company as well. The 3 ratios to consider are the price to book, price to sales, and price earnings ratios. As compared to the industry average, the price to book ratio is considerably low. This has the potential to mean that the company is entirely undervalued, which is a benefit to you, the investor. We have no reason to perceive that there is anything fundamentally wrong with the company or the industry. As analysis has shown, granite components in the building is a growing industry and must be seized while the true growth and potential has not been realized and capitalized upon. The price to sales for the Caesarstone is roughly 3 times the industry average, making it kind of expensive. Even though it may seem like a problem for the company, this relatively high ratio can be explained by the relatively low quantity of sales. As Blake explained, sales growth is precisely what we believe will be driving the growth of this company in the coming years, which will make this ratio fall back to normal. The price-earnings ratio is at a comfortable 15. This shows that the price of the share isn't substantially above the earnings of the share, and you will get more bang for your buck. Analysis of the profitability of the company has shown that Caesarstone is a good investment. The net profit margin is relatively high, showing that the company is able to manage its expenses. In regards to the gross margin, the margin is higher than that of the industry, showing that it has a lower cost of goods sold. It retains roughly 42 cents for every dollar generated, which is allocated then towards other expenses and things such as research and development. The operating margin is higher than compared to the industry. They have less of a financial risk because they are able to satisfy creditors and create value for the shareholders by generating operating cash flow. In regards to the risk component of the financial analysis, the current ratio for Caesarstone is at 2.17. The ratio is subject to change based on new financial information, which will be posted on December 31st. The ratio sits comfortably between 1 and 3. They are able to pay off their short-term obligations. However, they are not at risk of not taking advantage of their working capital. As far as debt to equity is concerned, Caesarstone is operating at 5.55%, as opposed to the industry average of 68.8%. They are operating with a substantially lower percent of debt, which lowers their risk. Management effectiveness is analyzed based on the return on assets, return on equity, and return on investment. The return on assets for Caesarstone is 19.06%. It is relatively high, which shows that the company is earning more money on less investment. The return on equity is slightly above the industry. Caesarstone operates with roughly 26.12% compared to the industry's 23%. This is expected of Caesarstone. It is growing fast in regards to the industry, which is a positive sign for investors. The return on investment is 24.87%, and it is relatively high and will show that the investment will pay out in the long run.
With all investments, there's a certain element of risk. One of the risks we believe comes with investing in Caesarstone is that quartz does not have the ability to become popular in the United States. We believe this risk is low, however, because consumer reports indicate that people are preferring quartz over granite, showing that it will most likely increase in popularity. Furthermore, we believe another risk is that the global housing market crashes. Although this risk is medium, future housing forecasts again indicate that housing sales are going to increase, showing that countertop sales will increase, which will help Caesarstone's profitability. The highest risk we believe is that competitors begin to enter this underdeveloped market. However, with Caesarstone's experience in the market and established reputation as quartz becomes popular, we believe that they will be able to control the quartz market and have their profitability and sales skyrocket.
We recommend to hold on to Caesarstone for 5 years, as that will allow for sufficient time for Caesarstone's management structure to stabilize itself and for its product to gain popularity. As we discussed earlier, we believe that as IKEA continues to grow in the US and add more locations, it will make Caesarstone countertops more accessible to consumers. When you combine that with the growing brand awareness through its partnerships with many top designers such as Tom Dixon, Caesarstone will be well positioned to capitalize on quartz penetrating the US market, which we believe will happen in the next 5 years. Judging by the numbers, Caesarstone is valued as a slightly above average company, but we believe it has potential to grow into a great buy. Its P/E ratio is just below the industry average, meaning it's a better purchase than the other companies in the industry. However, it has been growing at a consistent pace and is going to keep growing due to its relationships with prominent designers and its partnership with IKEA. Additionally, since the quartz market in the US is unpenetrated, there's potential that we feel isn't adequately priced into the stock, and therefore we recommend that you buy Caesarstone.